Hello, everybody. Welcome to the conversation of what the heck is going on in crypto. Because I know that's what you're asking, and so it's time for a market update. And I want to start by addressing kind of a couple of different things. We're definitely going to dive into the charts like normal, and we are going to talk about a little bit of news. What's kind of interesting lately, it is um, February 26th of 2025, and we recently, as in like the last handful of days, have experienced the largest hack in all of crypto history. And you probably think it's related to this big price action or that led to this, but the data actually shows otherwise. What's really fascinating is this $1.5 billion hack happened recently, and the markets barely moved, like at all, specifically Bitcoin. It happened on an exchange called Bybit. It was actually a kind of an authorized transaction, but not like, hey, you take the money, but more like, oh, they thought this was normal transacting, and so they approved these things, not knowing there was malicious actors behind it. The bottom line is there was all this Ethereum that got hacked and taken in, and this group that hacked now has like twice as much Ethereum as the founder of Ethereum. So I mean, it became quite a big deal. The exchange somehow is been able to pull off communicating well as borrowing money and repaying money, and so it's been a very interesting kind of couple of days. But I think it while it may be a variable in the fear and the FUD and the let's sell everything, typically it would have happened a little bit sooner, right? You find out that there's these big events like we saw with FTX or something else, and we start to see these big sell-offs. Everybody just starts reacting, panicking, freaking out, and just making decisions based on what they hear or what they're clicking on or some YouTuber, right? Whatever. And in this case, we didn't see really much activity or movement really for a couple of days. And that was kind of interesting. And so we'll kind of dig into that, but I just want to take a moment to pull up probably one of the really the better charts for the conversation, and that is a much more zoomed out chart of really what Bitcoin is. So see, if you look down in this bottom corner, this is, you can see the dates actually on the screen. It says 2011, and obviously to the right is going to be more current. You can see that this is actually right behind my little camera here is where we actually are today. But this is a logarithmic view of the historical Bitcoin chart back from 2010. And the price action that goes with it. And this is something I've showed several times on this channel, but it is essentially looking for correlations, as I often do. And I typically break them down into kind of these white lines that you see, and these white lines are the halving events. You can see the dates at the bottom of when the Bitcoin halving happened. Again, the Bitcoin halving being the algorithm essentially that times out the reward for the Bitcoin miners. And so we can basically project into the future, really roughly every 4 years, this is going to happen. It's actually every set number of blocks. It's like 210,000 blocks that are created on the blockchain. Then this halving event happens. And so, we've talked about a 4-year cycle. There's been all these books written on it, plenty of information out there if you want to go dig into it. But some of the correlations that I actually wanted to find out is, early on, you can't really look at this left side. The data is going to be not as usable because there's really only a handful. It's such a small population of people doing this that the data doesn't help us in the bigger picture, right? It would be like looking at this section of COVID, the COVID event that happened right in here, and saying like, oh, these are data points that are super important. Like, they're kind of an anomaly, or you see what I'm saying. So anyway, the point is, again, we're looking for kind of some correlations, and these green boxes are what most people are going to call the bull run. And this is a year and a half or so after the actual halving happens. You typically get a big run up in the Bitcoin price, and then you get a big sell off, and then it goes sideways for a while, and then we start the cycle all over again. And so this is simply me mapping out kind of what has happened in the past, and then this box right here is really kind of projecting what could potentially play out this time. Specifically, I'm looking at timing. I find it pretty interesting that this was 526 days, 548 days, maybe 550 days would put us around October, as you can see here. And this was a price prediction that I made kind of in the past based upon some variables. You can go find that video and check that out. I'm not saying it's going to go to 352,000. I'm saying that historically these things did happen, and if they were to repeat themselves, that would make the price of Bitcoin go to 352,000, which I think is kind of high, and I think October is kind of early. And so, in fact, just for this conversation, I had to delete this. So as of right now, we've kind of got things mapped out with, this cycle, this cycle. This is the cycle that we literally just finished. In 2021, we had this big run up, sell off, big run up and sell off. And then we had the Bitcoin halving, and now we're back into the green box. And then 2025 will go on. This is what is considered to be the bull run year, similar to what we've seen in these other green boxes. And then we'll follow a big bear market that will be red, and we'll see where that goes. Interestingly, the red box never goes below the green box, though, which is quite fascinating. And so we'll see what this ends up looking like. Looks like it actually got adjusted a little bit. No, I apologize. It did not. This is actually supposed to be from the price action of when the halving, the day of the halving, and going from there. So anyway, all that to say, this is a zoomed out kind of look on this. And I think it's pretty interesting because really what you see, regardless of the ups and downs that happen every single day, you can really see that over the long term, Bitcoin is a great investment for the sole reason of it seems to hold its value. Or the other argument is it is sustainable, whereas the purchasing power of the US dollar is consistently going down rather than the price of Bitcoin is going up. But that's a conversation for another day. So I thought we'd start there, and really now we can transition into from a weekly zoomed out, kind of viewpoint. I can't see how bad things are in this little box, right? I don't seem to notice, when it's this zoomed out, it doesn't really look that bad what's happening when you look at this over here. And so it's always just a reminder to go ahead and zoom out and get a different perspective. And that different perspective will help you kind of, not panic and not make emotional decisions like, oh my gosh, everybody cash out, sell everything. The markets are crashing, or, same thing for the opposite, person, which is, oh my gosh, it's so cheap, I'm going to go all in. It's like, well, why don't you hang in there? Let's feel free to definitely dollar cost average. Basically, I've been doing this channel and talking about this for quite some time. And so chances are, if you've been around any length of time, you've bought in way lower than this. But we definitely want to go ahead and look at kind of what things look like at the current moment, and I'll kind of share some different thoughts. So my previous videos talked really a lot about kind of this $90,000 to $100,000 range, and then $100,000 to $110,000 range, like these two sections. And really, we have to stay in this range in order to be considered sustainable, considered, still very bullish and still going up, and to the point of, it wasn't but a handful of days ago, and let's see if I on the 18th of February, so a week or so ago, I had made a comment in the Facebook group saying, we're finding a lot of good support right here, right? These candles were very encouraging based upon this big sell-off and deviation. We seem to be holding this range, and the likelihood of going to 88,000 and 90,000, this kind of lower section right here, started to dwindle and become lower and lower. And so it's like, hey, this is looking really good. And just like statistics, you sassy statistics, they go and mess with you, right? Again, if something has a 1% chance of happening, it's still possible. And that's the thing we have to remember, is we can only play probabilities, and we can only basically invest based on that. And so statistically, as this really kind of started finding support, and what's really interesting is you could see my green line as well, that came from these previous tops. It was really holding support as well. And so let me zoom back in here, and I'll kind of show you that we were staying on top of this green line, which is, again, been traditionally a very good sign for us, when it's above. And we statistically should have seen a break up, right? Or the higher probability was to go up. But in classic fashion with statistics, still can't predict the future. I am working on it, guys. Once I figure it out, I will let you know. but we broke down. And so it is what it is. And I kind of told you really where I kind of think it might be going is we really have to hold these levels right here. These candles are kind of our last candles to say, man, this level of support has to hold in order for us to really maintain a good upward trend. And if that doesn't hold, then the last line of defense is this wick right here, this candlestick right here where you see this little skinny guy. It ends right here, right about 85 grand. And so really where we sit today, what's so fascinating and how true these things can really be is if we don't close today in 11 minutes and 56 seconds, which not looking great, we really need to have this candle probably close above this in order to be considered an upward trajectory, an upward sign. My preference is to have the body of the candle, the thicker part, actually close where the other closes were, not the wicks. And so my preference is that this closes up here. And again, I don't see that happening. I don't really think that's going to happen. And so I think Bitcoin's in a little bit of trouble for the short term. Now that I've said that and everyone's kind of questioning their life decisions and wondering if they should sell everything and get out of here, let me explain and give you a little bit more perspective on what's going on. I've made several videos in 2025 already talking about how we should expect up to a 30% drop in price because traditionally that's what we've seen. Ironically, a 28% drop takes me to about $78,000. And as I've been saying since 2024, these orange lines are kind of our really our major support levels. Like the most support is down here in this 70 something thousand dollar range. And if we look at that, from the top to the bottom, where are we? Right around here, that would be 32%, which is very common in the crypto space. You've seen the videos I've made probably where I went and mapped out each drop in Bitcoin as like on these big runs, they run up and then they drop 30%. They run up, they drop 30%. They run up, drop 30%. And that's kind of like par for the course. And so as much as we love to see consolidation and going up, we have to rebalance. We have to find a way to stabilize the market. And so one way that I could show you really how that works is I can kind of show you from a moving average standpoint. In fact, let me just put that on the chart and put it back up. Really kind of how that works. So really this purple line is a 50-day moving average. It's an exponential moving average, which just it's calculated at a different time than the regular moving average. But at the end of the day, it's just an average. And averages are a really great thing to look at from a high level because the human brain craves reversion to the mean. Like our brain craves balance. So if we get too far one way, we kind of want to just go back to the middle, really make sure everything's good, and then we can go off again, right? Or we can swing the other way. But we definitely like to have a little bit of the stay close to home, right? So if the purple line is home, if you will, we always like to stay close to home. And when we get really, really extended from home, we have to kind of go sideways for a little bit to either go back to home or home has to come to us like it does in this case. So in this case, we're bouncing around home, we get overextended, we come back, blah, 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 blah. And then in this event, obviously we broke down. I've already shared this blue line being a level of support for me, which happens to be right around the $90,000 range. Makes sense to be buying Bitcoin there. It didn't hold. And so the next level, I've already shared 80 to 90 and so on and so forth. And then this is our final wick. And so let me read my little notes here. So ranging, okay, that's basically what I just said. A breakout or a retest of 85 would be this range right here. And that would be, again, considered pretty positive for, upward trajectory. But it's really kind of the last, I can't move it. It's really the last stop, as you can see, before we free fall, because there's really no support after this. This is kind of known as liquidity, and this is really the only option right here around 75. There's some consolidation here, but really these orange lines are kind of your next major level of support. And so what else do I look for? What am I looking for that could be a potential area? Well, this blue box I've marked on here is the futures chart. Now, the futures chart is something that I reference occasionally, where I talk about, think the stock market, right, in New York. Well, there's one in Chicago that deals with the futures, and it's the future price of corn and oil and different commodities. Well, you can now do it in cryptocurrency, and so for Bitcoin. Well, it creates these gaps over the weekends. And what happens is Friday comes, all this action happens, and then crypto doesn't close. Really, all the other markets do close, and then over the weekend, crypto is 24/7. So activity happens. Think after hours. If if you've been investing in the stock market or something for a long time, this is after hours. It's going on, even though the market's closed. And then when the market opens again on Monday, it has to start a new candle. And what happens is when a lot of price action, a lot of movement in the price and volatility happens over the weekends, it creates these gaps, and these gaps essentially act as magnets because the market, much like we want to stay close to home and we always want to get away from home and then revisit kind of a thing, very similar to this. This is kind of an area that wasn't tested, and I need to just go double check that that is a stable area or an unstable area. So it's kind of like a magnet, and it pulls towards it based upon really what it is. And 90+% of the time, these little kind of like gaps in the market that kind of happen over the weekends, these get filled at very high likelihood, very high probabilities. Again, not always, but very, very high. In fact, there's one down at 20,000, way down here that hasn't been filled. This guy down here. And I hope we don't fill it again. Or if we do, I would love to know that it's coming somehow so that I can really kind of profit from that. But literally over the weekend when this happened, it created a little mini gap. I'm not really worried about this. This will definitely get filled because I believe in the long run, the price of Bitcoin between now and the day I die will still go over the price of 85 grand. And so I don't really worry too much about upside gaps. But I do look at downside gaps. And we've been talking about this one for a few months now, since the election happened, basically. And it created this gap, and it could take months to get these things filled, right? If you go back and look at other gaps that are on here, sometimes they don't get filled for quite some time, especially like right here, right? This was in December, and then it really got filled in January. So really, that's not that bad. But how about this guy? This guy happened in May of 2022, and it didn't get filled till October of 2023, like 18 months-ish, right? So sometimes they don't get filled for quite some time. But what they do is they definitely act as a magnet, and they definitely, try to pull price towards them because, again, the markets are very uncomfortable. It would be like you having a retirement account and you've been putting money into it for 10 years and you've never checked it, right? So you really have no idea. I've been putting money in, it gets invested, but I really have no idea what my retirement account is. That's not a big deal if you're 30 years old. Who cares what your retirement account is? You're not going to be touching it for a long time. But there comes a time where you're like, I need to check the balance to see where I stand. I need to just check it and just see. And so it's kind of like I need to go down here and I need to open my investment account. And I need to see where I'm at, right? I need to check the email box. I need to check the mailbox just to see if there's any mail, just to make sure that it didn't get blown up or anything like that. And then really once I revisit this, I'll feel a lot more comfortable and I can make decisions from there, right? So that's a silly analogy to basically kind of say, represent why it has this pulling effect. Is because it's an unknown, it's price discovery is what it's called. It's really when it's this unknown area of price discovery. You don't actually know, or price action. You don't actually know what's going to happen here, according to the CME, Chicago Mercantile Exchange. Literally, that futures market doesn't really know. So they got to go explore it a little bit. And that's why it kind of pulls it. Now, again, it doesn't typically do this. It really doesn't often have these huge red candles. But again, once we get close, it's most likely that we're going to pull towards it unless there's just something blocking it, like a strong level of support. So in this instance, from an educational standpoint, and trying to help you learn here, is in my scenario where I say that this level has to hold, right? Again, this is preference, but my preference is I think that the highest probability outcome is that the price action of today's candle, which ends in 3 minutes and 10 seconds, has to close where this open or close, the body of this candle opens or closes, not the wicks. The wicks can basically do whatever they want. They are indicators, but they are superseded by the colored in rectangle as opposed to the little sticks, right? And so for me, knowing that this price isn't going to be recovering to this level, to me, that says this is a magnet. Now, again, we could be wrong. Or what's probably more likely at this point is we're wrong for now. Because I think what's going to happen is we're either going to go straight down because it's like, let's get it over with, right? Everybody's panicking. When you have all these red candles, sometimes that happens. We happen to have three big ones in a row, and there's some rules around that. When you have three big candles in a row, up or down, you have a lot of reversals from that. And that's just because people are like, oh my gosh, oh my gosh, oh my gosh, right? Three oh my gosh is equal, we should do something about this, right? And so kind of being in this position, my personal opinion, if I'm taking a guess, which I guess every day, right? That's really what I'm doing. Is I really feel like, kind of regardless what happens, we're probably going to go down and fill this. Now, once we fill this area, the question becomes: do we go all the way down to here? Right? Do we go ahead and get all the way down to the 73, or do we come down to maybe like 75-ish because it comes down, crosses through here, wicks down to here, and then gets bought back up. So maybe there's a big giant stick that crosses a lot of this. We don't really know. I don't know where price action is going. I can only go based upon, again, most likely scenarios. And right now, in my opinion, what's most likely is that we're going to focus on this blue box first. When the price gets down to that blue box, it gives me more data points that I then can say, okay, based upon kind of how it's reacting on this blue box, it's probably kind of going to keep going. But at the end of the day, we know that around a 20, 30% retrace, right, from the top to the bottom is very common, and it's very healthy in this market. And so even if it goes to 73,000, which sounds like a lot when it came from 109,000, it's actually still on par. It's still going in the right direction, and it's still in a healthy range. And I could show you probably on another chart, if I guess right which one I put it on, kind of another way to look at this. And so let's see. So we talked about losing the range. I really need to hold 85. I don't think that's going to happen based upon 30 seconds left here. And then we've talked about the higher range. We talked about the CME gap. One of the reasons that I think that it could definitely go down to this $72,000, $73,000 range is primarily because, again, the very, very top was like 73.8. These points of confluence, you have way more data points in here. So this is actually your strongest level, meaning that like it could come down here and it could close above here, but it might wick down to here or wick down to here, whatever. Like, you get it. I've been talking about these orange lines for, when did it break out? Since November. So for several months, I've been talking about really how we're probably going to be revisiting them. But obviously, you kind of never think that it's going to happen in giant red candles, and it's statistically still not likely. You very rarely get the reversal of this. And that's because there's typically variables that stop it. The greed side of your brain loves to have it run, but the panic can happen faster. But the problem with panic happening faster is algorithms are going to be buying dips, and you have no way to anticipate the buying pressure. So for example, if Bitcoin went to 20,000, some people are like, oh my gosh, I would sell everything and get out. Whereas people like me, traders primarily get excited when the price goes down, not goes up, which sounds kind of silly, but it's a way to manage our risk a lot better. When the price goes down, if I believe in the longevity of the asset, I'm just buying it at a discount. I don't care that it's cheaper, but the markets can remain, what's the old saying? The markets can remain like unstable essentially longer than I can remain solvent, meaning that I can keep setting aside 5 or 10% of my portfolio and exiting trades to get more cash. But at the end of the day, the market can move in a rate to where I'll spend all that money because, hey, the prices are great. I need to be buying it. And altcoins right now, I think, are a good example where altcoins have held really, really good with Bitcoin falling this much, which is kind of surprising. We can actually see that if we look at the chart over here. It's called Others. Actually, the Total 3 is probably the best example. Yeah, Total 3 is a really great example here because this is literally all the money inside of crypto. But what's interesting about it is it doesn't include all the money in Bitcoin, doesn't include all the money in Ethereum, which is obviously the majority. So this is like truly the altcoins, right? And when you look at this, you can kind of see it has this channel, right? We've kind of been bouncing around. And for Bitcoin to fall so hard, you really would expect a much bigger, deeper fall in the altcoin market. And we haven't really seen that, primarily because it's been slowly bleeding against Bitcoin for a while. But you could see that it wouldn't be crazy to have a little bit more downside, right? Kind of chop along the side here and maybe come down to here. But either way, we're pretty much in range for kind of like a healthy market. this was the previous top back in 2021. So here we are testing the top again. Clearly we didn't break through it, so we're probably going to come off of it, and we got to retest it again, or maybe we go above it and test it. But the point is, like, to stay in this little channel really wouldn't be crazy. And then once we get up here somewhere, yeah, it's going to run. It's statistically how it works, and it's how people think, right? People love to buy into stuff when it's going up, which is why investors can be profitable, is they just do the opposite of what the masses are going to do. Right. So if we come back to really the Bitcoin story here, kind of the Bitcoin narrative, I could definitely see how it could go down here a little bit, but I don't think it's going to be an instantaneous thing. I say that either today, meaning 4 minutes ago, for the next 24 hours, we're either going to flush and we're going to like start all over, whatever, or we're going to kind of work our way down here over the next week or so. And that will be the quote unquote bottom for now. We've had our 20-30% retracement. The market is healthy. And then we kind of start going up again because we're in a bull market. Right. And so that's kind of the idea there. Let me see if I can find this other one. Yeah, here we go. Okay, so here we go on Bitcoin again. Oh, this was clearly for a title. Yeah, actually, really great point. New high for Bitcoin, 109,000. But for how long? I wonder. Not long enough. All right, so same exact thing like I showed you on the kind of on the altcoin thing. Really, Bitcoin's bouncing around within a channel, meaning we've captured the highs, we've captured the lows from the beginning. We've just extended it to see what confluence we've had. And oddly enough, it bounced around at the bottom of that channel, went up to the top of that channel, bounced around there. It's been hanging around in the middle. But now that we have these new highs, where do we go from here? We either have to break out, which is fine, or because it's the top of the range, it might actually pull back, right? And so really a lot of my kind of conversation, where other videos I've talked about selling at 106,000 and kind of why, you could start to see how all these data points kind of start to add up, and you can start to build a narrative to increase your chances of success. So if you sell Bitcoin at 106,000 and you buy it at 90,000, and you did that a couple of times, you're doing pretty well. But even if you bought at 90,000, you're experiencing this, well, okay, you're still in a decent spot, knowing that you sold it above, right? At the end of the day, though, you look at this, and in theory, if this thing was to chop sideways, it wouldn't go straight down like this, but it would go up and down and up and down and up and down and up and down, and maybe end up over here. Look at where that is. How interesting is that? It's 73,000. And why is that? Because I happen to have, if I drew a line that way, and then I use a little paintbrush guy, and I go up and down and up and down and up and down and up and down, that kind of a thing, right? And it could be way more dramatic than that. It's probably not going to go straight down to 60,000, right? And it's probably not going to just go sideways for a long time and stay at 85 grand, right? It's kind of right around that midline. So it's going to work its way back up, or it's going to work its way back down. Again, just based on the patterns that have happened in the past. So that's kind of the idea, but you can see how if we don't flush all the way down, oh, this is why maybe it might take a little bit. I don't really think that's the case personally, but a really good way to look at this, because as an investor, I don't want to be right, I want to be rich is the joke, right? So like, and all I mean by that is like, you have to set your pride aside. Nobody cares if you guess the future because you were guessing. Right, my kid can get a guess, and he might be exactly right. He might say Bitcoin's going to be at $73,000 on Tuesday next week, and he could be right, but he's literally guessing. So what do? We try to gather data points to increase our probabilities of success. And so I was going to show you how. Let's see, what would be the best chart to show you this with? Probably just come back over to here. Yes. Okay, if we look at 2021. Right? We had, here's a good example right here. Here's 31% retracement from this high down to this low. It was going straight up. You can see that. Literally going straight up, right? Or, you know what I'm saying, not straight up, but up and to the right, which is really what we want. And in that process, it went down, came back up, pulled back a little bit, went up higher, came back a little bit, so on and so forth. But here's a good example of a 30% retracement, right? So we might be experiencing that ourselves right now. And what could that lead to? That could lead to higher prices. And that is a stable, healthy market. But what I wanted to show you is that the bull market of 2021 that we all got wrong. Oh, I'm sorry. I got wrong. You guys may have got it completely right. But where I got wrong is really not understanding that we were probably going to have another pump, right? And so I totally took some profits here. I totally took some profits here. But like, if I could go back, I would have done completely different. But that's not really how the world works. But if I go from the top here and I go to the bottom here, this is a 55% pullback in the price action in the middle of a bull market, which was really, really bizarre. Now, my narrative, if you've watched my video on this, is that obviously we had a pretty random deviation here. This is a variable that no one counted on, this whole COVID thing. And everyone's freaks out, and they definitely like sold off everything. And if you were able to buy Bitcoin at $4,000, like, you freaking rock, congratulations. But it went up after that. No big deal. But why did it run so fast? Because we printed a lot of money. And when we print a lot of money, that has to go somewhere. And when you start handing out money, you can't just sit on it. Specifically, think Wall Street, right? Think institutional players. They were given all these SBA loans, EIDL loans, whatever it was. You have to use that capital in some form or fashion. And what most businesses did is, instead of using that for investments, which you weren't supposed to do, is literally they use that money to clearly pay all their expenses like they were supposed to, but they use all their existing capital to go push into the markets. Well, if everybody's putting capital into the markets, they just go up. And so this was a huge run up due to all the printing of money and all the deploying of capital, because where else were you going to put it? Like, it was being printed, meaning its purchasing power is constantly going down at a very fast rate. So the only way to hedge against that and protect against that would be to put it into something that's going to be going up, the whole time. And so it goes up, goes up, goes up, and they stop printing money. Now, once they stop printing money, what happens? Well, in theory, you're stabilizing the dollar. That's a much longer conversation. But more importantly, the money printing has stopped. So the inflationary aspect of it kind of went away as well, which means I need to be taking profits, which means we're going to experience some sell-offs. And once that sell-off happens, now the market can stabilize. And I say that to say that, like, kind of between here and here, you could say like, oh, I could totally see how we really have like this upward trend. And this down here was a big deviation from the plan. And this up here was a big deviation from the plan. You see what I'm saying? So it's just, again, just an opinion, just kind of another way to look at it. But my point was showing this to you is that it really is even possible to have a 55% pullback, which we saw kind of in the earlier markets, like 2013, 16, that kind of a thing. I don't think that's a variable here. And that's because we can actually track the inflows of capital into Bitcoin, into Ethereum, into these things, because it's on chain. It's public, transparent data, no more hiding. And now that we have ETFs, it's documented twice basically, because they got to actually report all this stuff. And so we can literally see all this money flowing into Bitcoin right now. Actually, what's really kind of interesting is there's so much money flowing into Ethereum right now, which really says that the market's not over. But Ethereum, compared to Bitcoin, happens to be insanely undervalued. Right? Here's the valuation of Ethereum and Bitcoin. This is, instead of Ethereum to USD, this is Ethereum to Bitcoin. And so as this goes down, Ethereum is losing value and Bitcoin is technically gaining value in comparison. So you can see that really here, back in 2021, since the last bull market, Ethereum has done nothing but lose. Bitcoin has been much stronger than Ethereum. That's the whole point, right? And this must not be in a logarithmic view. Yeah. So it's really just lost all this value. And so what's happened as Bitcoin's gained all this value is institutions are looking at this from a standpoint of either deploy capital into something that is a lower valuation, has more upside, or take profits from Bitcoin, which is probably the smarter thing to do, and move it to Ethereum to rebalance the portfolio. And by rebalancing, which typically happens in January, you're just going to move a lot of money. It's just inevitable. So that's kind of my viewpoints. Let's see. The other thing was this. The variables when it comes to kind of this big hack was, if I literally go to the daily time frame here and I look at it, this is Saturday. This is Friday. So what's kind of crazy is we pretty much found out right around the end of this day right here. And when you look at the price action, nothing really happens for 2 days. The largest hack, $1.5 billion stolen. Biggest hack in history. But the price doesn't move. Well, I mean, it obviously moved. But it stays right around $95,000, $96,000, $97,000. Maybe it's not hack related, right? And maybe it is. And I'm sure on Monday morning, when everybody goes back to work, they're like, oh my gosh, sell everything. Not really. But you get the point. Retail investors especially will do that. Now, what would be the other variable? Clearly, the other variable would be the S&P 500, which this has been a conversation for, I don't know how long we've been talking about this. By the way, the difference between a regular chart and a logarithmic chart is the left side, the numbers over here, right? 3,000, 4,000, they go up linearly, right? Sequentially, whereas logarithmic is think to the power of 10. So when I change this chart, it's the same data, nothing changes except for obviously over here. It kind of changes logarithmically. So the reason they do that is because when you have something like this that can be a lot of tech stocks is where people started looking at this, where you have exponential swings. It's easier to see trends on a logarithmic chart because it goes up so fast and down so fast, that kind of thing. And so when we look at the stock market, and I'll get my mug out of here and just show you on the screen. I showed this chart from a long time ago, and this goes all the way back to who knows when, 1929-ish, whatever. And it's not even like perfectly accurate, but the whole point of this was literally just kind of to throw something on a chart and say, hey man, we've got a pretty strong support here. And really since, the 80s, we've kind of been overperforming the trend, which is awesome. Primarily because in 1971, we got off the gold standard, and so the purchasing power of the US dollar went down. But that is a video for another day. And we're still within this range, right? And all this is great. From this top to this top of 2000 is what I measured, and it chops around in that spot. And obviously we had a 50% crash, a 57% crash, yada, yada, yada. I've made several videos on this where I just share my opinions on it. But the next top then would be what? Probably right around $6,000. Why? Because that's where the line goes. You know what I mean? It literally just kind of goes to there. So the point is, if pretty much in the last 100 years, we've been within this channel, and when we're at the bottom of the channel, we head towards the top of the channel, and we're at the top of the channel, we typically head towards the bottom, or in this last generation, we head towards the midline, right? And obviously in 2008, we broke lower, and I don't foresee us going way down here, because that is, America, like we literally couldn't handle this. We couldn't handle 2008, and that was 57% drop. So I'm not going to sit here and be like, guys, check this out. We're going to $1,000 on the S&P. Like that's not happening. That's just silliness. But it really isn't crazy to experience 30, 40, 50%. Here's that post sell off from all the printing of money that I was talking about on the S&P. But my point is we're at the top, or we could potentially be at the top. Is 6,000 the top? Question mark? Probably not, because again, this is an opinion, but pretty much the theory is this, that in today's economy, we are no longer willing to kind of suffer the level financially in order to reset our greater economic good as a country. And we know this because of what happened in 2000. We know this especially of what happened in 2008, and then we saw it again here in 2020, where to be a politician who's like, guys, we got to cut spending, which I know everybody's going to say, well, my politician does that, does he or she? It sounds good in theory, and I understand, but who's going to run on a platform of, guys, we just got to we really got to suffer for 5 to 10, and if we suffer for 5 to 10, we will reset our ability to thrive for our great grandkids and our great great grandkids. Who's running on that platform? Nobody. Why? Because you have like a 2-year to 4-year to 6-year term, right? Whatever it is. Like you, as much as you say you care, the incentives are not aligned, my friend. And so, not to go on a rant here, but I say all that to say that what's most likely to happen is the same thing we've seen all throughout history. Anytime that there is a papering of a currency, right? Think what the dollar is, right? It's supposed to be paper gold, but really it's debt. It's a hot check, honestly. But the point is that I'm getting so off topic here. The point is that it's easier just to print money, kind of make everybody happy. Cool, we're good. Kick the can down the road, right? So it's most likely that we're going to print money, and if we print money, whenever that happens, which it'll happen. We're 35 to 40 trillion dollars in debt now. In the next 10 to 15, in probably 15 years, I think it's projected to be at 100 trillion. So it just kind of gives you perspective of how much money they're going to print. Well, when that happens, where does that money go? In tough times, we absorb it, right? We actually take that capital, we spend it on groceries and all that kind of stuff. But the wealthier people, they don't need that money for groceries. And so that's going to go into the markets. And those larger deposits cause prices to go up because it protects their wealth when the purchasing power of the dollar is eroding. Does that make sense? So in the long run, we will be going up. There's really no question about it. I have yet to find an argument for how we could possibly go down, especially to these insane levels that I pointed out. But what did I write on here? I did write that it's really not that crazy to see. Look at this, a 30% drop. If you can read that in these tiny little letters. It's what we've seen in the past. It's really what a lot of these other drops are. This is considered a recession, depression, whatever you want to call it, depending on who you're talking to and probably what side of the aisle you're on. I'm on the money side of the aisle. Whatever side that is, I'm on that side. Because if we can fix the money, we can fix a lot of these problems. So buy Bitcoin. And so 35% really wouldn't be kind of crazy, but the point is that it will probably go up from here, but we will eventually experience some level of response to, you see this purple line, we're getting too far away from home, folks. And so we have to stay here while home comes to us, or we kind of got to go back to home. Now, I have this little line in here that I pointed out in other videos about being most likely being support because this was the previous high, so it's probably going to come down here, bounce on top of that. But the point is, it wouldn't be crazy to see, obviously, some selling, right? This is a monthly view. So let me go to a daily view, and you could start to see what I'm talking about, right? What did we have? Up, basically. Really strong trend up. And we're technically, if you were to draw a channel within a channel, right? And I'll just do it really lazy, like right here, just to kind of like point the theme out, right? We're in that channel. Nothing's really crazy. But we've reached this top. We're not progressing anymore. Let me move this over here. We're not progressing anymore. Somewhere around 6,000, 6,100. What was the actual top? The actual top was 6,147. You can see it right up here in these little H's high. You hover over that candle on trading view here. So that was our high. And what have we seen? We've literally seen nothing but selling. And here was Thursday. Here was Friday, which Bitcoin had some reaction to as well. But then there is no Saturday. There is no Sunday. So what happens next? Hey, it jumps to Monday. See how it says Friday, Saturday, Sunday down here? So pretty big selling. But once you get this big of a candle, we've kind of broken this upward momentum. It needs to retest. And so it came down here, it went below, and now it's staying below. So we're going to see what happens over time. It doesn't take a rocket scientist to say it's probably going to bounce around here. All I'm saying is that it's probably the selling pressure may have something to do with the largest crash in crypto history. Totally. And it may have something to do with the fact that the S&P is also selling off, right? But at the end of the day, it doesn't really matter. If we're interested in the crypto market, I primarily just want to look at this chart or the Bitcoin chart if I'm interested in Bitcoin. And I want to say, what is the highest likelihood? If I wanted to put more money into Bitcoin, what is the highest probabilities to reduce my risk is really what I'm looking at. Meaning like when I deploy the capital from that moment on, it's most likely to go up. I don't care if it goes down, but I'm looking for if it goes up because obviously when you can buy the bottom, your risk is the lowest because you're typically not upside down, really ever upside down. And so that's a huge benefit. So where are those levels? Well, they were in this range, up and down and up and down and up and down, right? But now we broke out of that range. So where are our next levels? I shared my thesis on this already. Full disclosure, and this is where somebody's going to call me a hypocrite eventually, I did not buy kind of in this range, even though I've told you in the past that I probably would buy these range, and it's just because new information came about. This is way too deep into trading, but it's the type of candles that they are told me that it's going to keep going down in essence. And the volume, the amount of money flooding into that also is a signal of like, hey, there's way more selling pressure behind here. If you buy here, it's going to keep going down. There's more sellers than there are buyers. So we can see all that in the short term and make decisions. And so as I posted in the private Facebook group today, it's all about patience, right? I jokingly say I make my money between my ears, just meaning that I think differently. I'm willing to think differently. And probably the most importantly is the people who make the most money in trading are just insanely patient. And it's literally a skill that has to be acquired over time and practice and practice and practiced. And you just have to get really good at dollar cost averaging. When the price goes down, I wanted to put a little bit more money in, a little bit more money in, a little bit more money in. So if you've been buying on the way down, there's nothing wrong with that, right? But the thesis here is, again, what area reduces my risk the most? As I've said since we broke out, it's going to be these orange lines, but we may never really get there, right? I have to see what these next couple of candles do, but it wouldn't be crazy for me to buy a little bit at the bottom of this box. And if I'm buying a little bit at the bottom of the box, depending on what the candles do, I'll probably buy some, down here by these orange lines. But as the short term, really where I'm thinking in the short term, where's it going to go? This is the daily chart, which means each one of these lines, these candles is a day, right? What happens when it sells off like this is it just doesn't go straight to zero from here, right? It's going to, just like on the way up, it went up and down and up and down and up and down. On the way down, it's going to go down and then up and down and up. And so what I think is going to happen is, I think, depending on how big of a green candle this is, or if it's a red candle, but I think it's going to be a green candle. And I think what's going to happen is we're going to come back up here and retest this area. And this area is now going to hold as a ceiling, as support to stop the price from going up. And then once we do that, then it's confirmation. Cool. Now that we literally have broken down below and we've come back up and we've hit that ceiling, now let's go down and see where the floor is. The first floor, right, is going to be this blue box, right? So I think we're going to go up. This is where I would, for more advanced people or people who are actively trading, I would be interested in shorting somewhere between 80, probably, what is this one? 89, we'll call it 89 and 92. Right? 89 and 92, depending on the price action, I would be interested in creating short positions here, believing that it's probably going to get rejected and come back down, and I would take profits in this blue box. I probably wouldn't wait till down here, just because, again, it's, again, that's it. Not to get too technical, but assuming at a zoomed out level, it's probably, if it's going to go down there, it's going to go down there. I can't do anything about it. I want to secure my profits and then take those profits. And then if it does go down here, I'm going to redeploy all those profits into that thing at that price, right? Or in this case, it's Bitcoin. So long story short, to kind of finish the trading conversation, is it comes down. I think it's going to work its way back up here, maybe some like right around here, the bottom of this range. And then once it does that, it can kind of work its way back down here. And then maybe it comes up and it tests this, which is pretty weak, but let's just say it does. And then it could come down here. And what does that do? That kind of creates this downward sloping channel as well. That kind of creates a range, and you can essentially trade that range. So that's my guess, is that it's probably going to go up and down kind of at this angle, and I'll be able to kind of take advantage of this. I'm not interested in taking a short position right now because I'm technically at the highest risk. From here, it's most likely to go up because I have all this selling pressure right here, meaning that the sellers might be exhausted and there might be some buyers that want to buy. And that buying pressure is probably going to be more than the selling pressure. And so you can kind of see how I develop these theses. Thesi? You have to tell me in the comments how to actually say that. I don't really know. So that is a really, really advanced deep dive into kind of what's going on in the market and kind of my really my thesis for right now. And the thesis has to change because we broke out of the range. We didn't get above the top of the range, and we've broken officially and closed below the bottom of the range. This candle didn't do it. Interestingly, this candle closed above the top of the range, so 0 decisions were made by me. The moment this one went down and then started bouncing back up, I'm like, I don't know that we're going to get up to here. Just like on this candle, I said, I don't know that we're going to get back up to here. And so that tells me I could go look in what's known as the order book, where you can literally see all the orders that are placed. And I can see in aggregate how many sellers there are and how many buyers there are. And if there's that many more sellers than buyers, that's just one more data point of saying, okay, well, there's probably a lot more this than this. And so you don't want to bet against the masses, right? And so when it comes down this low, what's the most likely? The most likely is it needs to go up, hit resistance. And if it's going to keep going lower, that's what's going to happen. It'll get rejected around the major levels, which is going to be somewhere in this range, right? Anywhere around this consolidation area and anywhere at the bottom of this range. I don't think it stops right at 90, or in this case, this is 91, but we'll see. like I said, anywhere between 89 and 92 is a pretty big range, um, depending on where it could consider, the resistance. But all these big red candles are liquidity. There's a lot of opportunity in here, for the price to just move quickly, much like right here. And that's why if it goes up and it comes back down, it's probably going to move pretty quick because there's nothing stopping it on the way down here, right? And so this candle could just come straight down because there's really nothing stopping it. But we are in the middle of the week, and often what I see is that pretty much the reversals kind of happen in the middle of the week. So you have a pretty big move at the beginning of the week that continues Monday, Tuesday, Wednesday, and then somewhere around Wednesday or Thursday, you get a reversal because people want to get out of their positions. There's options and derivatives and financial products that are weekly and can be leveraged by like people smarter than us with way deeper pockets than us. And so they have to kind of hedge against that. And so that's a lot of the money. And so you're going to see price action being impacted. So that's enough technical talk for the day. At the end of the day, this is really where we stand. Altcoins are pretty strong right now. I say that they're strong for the current market conditions, but they are bleeding. They are bleeding out. In fact, Ethereum. I'll give you a good example here. Ethereum. I made a comment, and if I didn't make the comment out loud, I was thinking it, that this probably wasn't going to get filled because this is a monstrosity of a deviation. It creates a huge imbalance, but it's so big that I just didn't know if it was going to get filled. I was kind of wondering if we were just going to hold this line. I wasn't really sure. I'm in a Ethereum long right now, but because I don't know if I'm going to be right or wrong, I also am in a short. Basically, you can balance, create a neutral position so that you aren't going to win or lose until you start to see things go in the right direction. So for example, if I went long right around, say 2,400 and I went short around, let's just say right here at 2,800, it kind of has this neutral zone of pretty much anything down. I'm profitable in the short and I'll kind of break even on the long, and anything vice versa. But once it breaks up or it breaks down, I could take profits kind of out of that range. And if it comes up here, I'm willing to take a small loss on maybe my short because it's most likely to keep going up at that point, right? And same thing if you were to flip it. So it's just a way to manage your risk. And if you haven't got that theme from me talking in any of my videos, for those who even watch these videos, it's to provide value through the lens of you can make money and we should be taking a risk to make money. But the only way to do it, in my opinion, is how do I make money if I'm right? But if I'm wrong, how do I still be profitable? And if you can find a way to be right and make money and then be wrong and make money, maybe not as much, maybe even break even, maybe just not lose money, then you start to become a little bit more bulletproof. There's going to be times where you just can't get it right. But if you expand that over 5 years, 10 years, 20 years, 30 years, all those losses don't impact you. And so your compounding ability is substantially higher. When I talk about wealth building, it's not to be confused with making a lot of money. That's getting rich. And don't get me wrong, I'll take any dollars that come this guy's way. However, really making the money is just the first step. Protecting the money and keeping the money is the bigger part of the game, right? Finding tax advantage solutions so that I'm not paying taxes on all these different profits, especially as a trader where I'm in and out and in and out. How do I lower my tax liability? And then also, how do I reduce my risk from the biggest risk of all, what I don't know, right? I can't predict the future and I might be an idiot. And on top of that, hey, things could happen like we saw with FTX that it's like, what? I didn't see that coming at all. That's okay. How can you protect yourself from those things? And will that impact your returns in the long run? The answer, yes, it will. But I would rather take a net, say 30%, than take an extremely high risk to get 60%, because 60% can also be 0% or worse, negative 60%, right? And so I really want to come ahead in the short term, and those habits that we do on a daily basis and we practice, or that I practice, for those who are active, obviously you can practice them too, but it's those daily habits that ultimately create this track record over the long term. And it's very similar to eating healthy or going to the gym. It's just, if you did it every day, it makes it very challenging to not get results that you want. You know what I mean? Like, I've never met anybody who goes to the gym every single day and is still like really out of shape. You know what I mean? And I have some friends that like go to the gym literally for social reasons, and they're in their 50s. But at the same time, like, hey, this is a huge opportunity for you to have social engagement. But on top of that, you're literally using your body, you're exercising, and you still look quite large. You're a big man, right? They're gonna get results. That's just how it works. So that's my 2 cents. That's like 50 cents, right? Not because it's more valuable, but because it's, I was thinking an hour, but about 50 minutes, I was like, gosh, this is a lot. So appreciate you sticking around. I hope that helps. If it doesn't, hey, turn off the video. Have a great day. Do the best you can to be smart about this stuff. Be as patient as you can. Develop a thesis. Stick to it. Don't change your mind. The easiest way to win at this is buy Bitcoin, store it in a safe place on a hardware wallet, forget you have it, pass it down to your great grandkids. It's impossible to lose basically at that point. It's extremely difficult to lose at that point, right? So have a great day. We'll chat with you soon.